Hello and welcome back to our tutorial. Today we are finishing up the last pieces on setting up a file in Epic. We've already went through the creation process. We've been through everything on the Gen Info tab, and now we're going to go through the Policy tab. Now on the Policy tab here, I already have the account loaded that we were working on. The first thing that we come across is Schedule A. Within Schedule A, you have three different sections. All right, so under Commitment Owner and Lender Policy tab, you have the first thing that pops up is the commitment date. The commitment date is the good through date from the county from the search. So we're going to say that the county search was good through August 1st of 2021. Now, you would select this box if it is a cash deal. Obviously, we have lenders, so it will not be a cash deal. Now, if this is a hold open, if the person who is purchasing the property is going to turn around to sell it again, either because they're fixing it up or what have you, you would do a hold open. Next, you have certificate of taxes due. Now, this field we can set up in your profile within Epic so that it automatically populates the same fee for the certificate of taxes. If you don't want that set up, we can leave that blank. You can just fill it in whenever you wish or whenever there is a certificate of tax due. Normally, you would have a $25 fee in here if that's the case. If you are changing this field for any reason, whether it's pre-populated or not, you will always need to answer the question to overwrite the calculated field. So just click OK. Are there any additional charges? It's rare that you would fill any information in here, but the most common that I've seen come through are due to multiple parcels. You would include additional parcel searches, things of that nature in this field. You don't want to use it for much of anything else. If you have questions on that, please feel free to give us a call. We'll be more than happy to guide you through it. The additional charge amount, obviously, if you're putting anything in there, I always like to put in a $0 amount just so that the commitment and policy actually don't show a blank field. It just shows zero. Now, under the owner policy, select standard policy here. The owner policy, if you don't want to insure it, just select owner policy and select not insured. Obviously, this will not populate if it is a refinance. You will only have the option for a lender policy. The policy number is only created once you actually have the closing and the policy has been submitted. Policy date is the date of recording of your document. Obviously, right now we're setting this up pre-closing, so we wouldn't have that information. The policy amount is automatically populated from the Gen Info tab. So this is the amount that we put in originally. Now the recording info here, if you select from the list, you can choose a deed in lieu of foreclosure, the public trustee's confirmation deed, or the special warranty deed. Usually you're not going to have anything that's going to be on this list specifically, maybe the special warranty deed, but if it's just a warranty deed, just select it, delete the special part, and just leave it as the warranty deed. If this is a reinsurance, what is the date of the old policy? If they are within a certain time frame, they may qualify for a discount. This varies based on the state, so you consult the rate manual for additional information there. Under the lender policy, all of this information from the lender is pulled from the Gen Info tab, so you don't have to re-enter that. Just be careful not to right-click and delete it. The dated date will be the date of closing. You have the option for policy. You'll select either mortgagee or you're going to select not insured. We're going to go ahead and insure this one. Under other type, you have for Colorado the selection of standard or short form. We'll go ahead and select standard for this one. Depending upon what state you're in, you may have an extended policy available as well. Again, the same as the owner's policy above, the policy number will not generate until a policy is actually issued. And here we have our policy amount, which is pulled in from the Gen Info tab over. If for any reason that you are insuring less than what is on the deed of trust, you will change that information on this screen only. You will not change it on the Gen Info tab or in the other screens that I'll show you in just a moment. If this is a construction loan, you'll just simply click here and answer these questions. Is the construction loan to be insured also the permanent financing loan? If it is, select yes. If not, select no. If it's not, will you be insuring the permanent financing loan when the time arrives? If you are, select yes. If not, select no. Are you insuring a construction loan? Just yes or no. You select yes on this. Now, these, depending upon how you answer these questions, may qualify for a discount. So make sure that you pay attention to how you're answering these questions. We are not doing a construction loan for this one, so we'll select uncheck that box. Is this a concurrent residential bundled loan rate? Well, yes, we're going to do concurrent because we're creating this concurrently with an owner's policy. And of course, if this needs to be a TBD premium, you'll check this box. All right, now you have the second option here for additional lenders. Here will be all other lenders if you have more than one showing on the Gen Info tab. So if you select this, it'll load all of the lenders. In this particular case, we only have one additional mortgage, which is for Bank of America. Again, the dated date is the closing date. You won't fill this in until after you close. Policy, we have this one set as not insured. We're going to change this to mortgagee. Leave it as a standard, $50,000. Now, all these questions are the same as what it was on the other screen. It's just in a different section. Once you've finished filling out all the information here, just select close. All right, so now we have the chain of title, and you'll select deeds. Here's the information that you put in for the prior owners of the property. So we're going to put here that the last person to transfer the property to our current seller, I'm going to say this was Wells Fargo. And our grantee, of course, is who currently owns or who's getting ready to sell the property, which is ATGF. The instrument type was a deed. We'll go in here and we're going to put in special warranty deed. And again, you'll have to overwrite or select OK for the overwrite on the text. When was the document dated? So we're going to say that this property was actually transferred or sold to ATGF on January 15th of 1998. Special warranty deed was recorded on January 20th of 1998. And this was recorded in book 546, page 95, at document number whatever. Just select something there. And you see here the clause that builds itself as you type that in. Up here, you'll see that we have deed number 1. This one references the information that we just put in. If we need to add a second one, we just go here to the plus sign, click there, and now we have the ability to put in another deed. So here we're just going to leave it as just one. Remember, always select close so that all your information is saved. You'll see here we have a check mark, meaning that we've entered information in. Now we have our general exceptions, survey exceptions, mechanics, liens exceptions, etc. Now under here you have the issues and special exceptions. Quick type exceptions are absolutely wonderful to use, especially if you already have exceptions available that you don't want to have to put in individually. You can click here for quick type exceptions and you can select create new. Type in the name that you want to give your exceptions. What I would recommend is if you are doing exceptions for a subdivision that you might want to reuse, name it according to the subdivision that the exceptions apply to. So we'll just put in Valley View Estates. Now here you have the ability to type in. You can type them out or you can copy and paste. The biggest thing you have to keep in mind is that anytime that there is an enter or a return to a new line, it's going to trigger the system to treat it as a new exception. So if you're copying this from a PDF may have one line and a return for each line. So for one exception, you may have 4 lines, which end up being 4 returns. And in this case would make it 4 different exceptions. So you definitely want to put that into a text document or something to make sure that you remove any unwanted returns within the exceptions. So here we're just going to put in exception 1, exception 2, just so that you see how everything appears in the system. Now, whenever you've entered in all your information, click Process. You'll get the box up here that says Process Successfully. Just select OK. Now you'll see that each one of your exceptions are here listed. And as you hit the return to the next line, the system treated it as a new exception. So we have everything set up there. Now, if there are additional standard exceptions or anything like that that you would like to put in, say for mineral rights or water or anything of that nature, you can go in and select another. And you have all these options here from the ones that you've saved. Now you see here Valley View Estates. This is the one we just created. So we'll go ahead and check Mr. Subdivision. So now we have all of this information into our field as well. You can select back and forth to see the different exceptions. Once you're done, in this particular box, you'll just hit X. Now, obviously you don't see these here. You will only see them if you click on the QuickType exceptions. And then once you're ready to issue the commitment, it will be there as well. So let's go ahead and add our tax language in, our tax clause. So we'll select this one, and we're going to do taxes for the year 2021 and subsequent years only. And this is going to go on all the policies. And now we'll select close. Now whenever you're looking at this, this will tell you right here in the first line what the exception is. Anything below that will show you what it's going to appear on. So in this particular case, the commitment, the owner policy, and the mortgage policy. Now, of course, if you have any additional exceptions that you want to add, you can put those in there. You have general, mobile home not attached. This is basically personal property exception. Basically anything that's not tied down to the property or permanently affixed to the property is not included in the policy. So we'll select that, and again you'll see that it appears now since we've selected. Once you've finished inputting all of your exceptions, now you have your right of access question. Can you get to the property? Is there public access to it? If there is, then go ahead and select yes. If not, then you need to put in an exception as to the right of access. Now your next section is your requirements. Again, you have QuickType requirements. You can select or create new like you did for the exceptions. We'll just do my requirements, and then we'll close this out because we are good here. And then we'll do warranty deed, just a standard. You got to have a warranty deed transferring. And then we'll do a mortgage and deed of trust. And the great thing with the requirements, it automatically checks the commitment, so you don't have to go through there. Once you click on it, if there's nothing to add, it's just a general requirement, you just select OK, and you're good to go. It adds it in. All right, now Schedule C is our legal description. In the Gen Info tab from the previous video, we actually included it in the address section, but here you have the ability to put it in separately. And then, of course, your endorsements. You have your common endorsements, condominium, planned unit development, variable rate with negative AM, manufactured home. You can only issue this commitment if you have specific documents recorded with the county or that have been recorded with the county. If you have, or if you need any additional information on this, please feel free to give us a call. We'll be more than happy to provide you the information that you need for this. So we'll go ahead and do the 8.1 and add that in, and then we'll do the 9-06, add that in, and then we'll do, okay, so under the location, we'll go ahead and select that it is a single family residence. And that's the address. And we'll select the box that this is going on to mortgage. Now this is going to tell us that this will trigger a manual review, so we'll just hit OK on this. Now one additional thing that has popped up on the endorsements as they've come through is this one right here where it says action, include by reference. In some cases you will want to set this up so that it just checks the box in the policy that states that you have that coverage. Other times you will actually just want to include this, which will attach it to the back of the policy as a separate page. So you have the actual physical endorsement and every thing spelled out, the verbiage for that policy. We normally do include this, although the system will default to include by reference. It prevents a lot of confusion if you just include it instead of selecting include by reference. Now we'll go ahead and hit close here, and we have all of our endorsements here. And I'm going to actually go in here and remove this endorsement because I am going to get a manual review requirement, and I don't want to have to worry about the manual review. All right, so there we go. Now we have everything set up, and now you can look here at your premium calculator as Epic has been calculating it for us. So here we have the owner's policy date, the amount, and then the premium amount. So we have a premium of $1,413. And then we have our mortgage number one, the premium amount is $400. And then the mortgage number two for the premium of $130. The gross premium, which adding all of this together comes to $1,943. There are no fees for the endorsements. Agent reinsurance contribution, this is the amount if the policy exceeds $3 million. So if you were looking at an amount over $3 million, you will want to contact us so that we can provide you with the reinsurance contribution amount and ensure that this information is correct. And then, of course, we did not issue a CPL for this file, which I'm going to actually go back and do and show you how to do that. And then we have the amount that needs to be remitted to ATGF, and then the amount that you keep. Otherwise, the last piece of information on this screen is the endorsements. If you click this will show the endorsements that were provided and how much those charges for each of the endorsements were and what the charge was for either the owner's policy or the mortgage policy. And if we had selected MP2, it would have shown up on the mortgage number two as well. It'll actually be here to the right of that. Once we're done, we're going to hit close. We've verified everything. We're all good to go. Let's go up and issue a CPL. I'm going to do it for lender one. Create, issue. Now we get our new window with our CPL, and we're good to go. For those of you who are not familiar with Epic, we do have an electronic verification system for CPLs on atgf.net. Any financial institution that the CPL is issued to can go to atgf.net/ICPL verify, and then they can enter the code here. Then it will pull the CPL for them and verify that it is good to go. All right, now we've finished doing that. We only need the CPL for the first lender, not the second, in this particular case. So if we go back to the premium calculator, now you'll see that there is a $25 CPL fee that's added to that. We're more or less complete with setting up the file. The very last thing that we want to do here is to go ahead and issue a commitment. So we'll go up here to the tab that says commitment, just click it, and we'll get the option to preview the new commitment or issue a new commitment. So let's go ahead and preview, so we'll see the draft version of it. Go ahead and make the screen a little bit bigger, and we'll zoom in. So you have everything here as far as the first few pages. It has just the general information, and now we have the main part of the commitment, the identifying information, and then in Schedule A, you'll have all the information here. All you need to do is just go through, verify that everything is on here. If there's nothing else that needs to be changed, then you can just simply exit out of this and go ahead and issue your new commitment. So let's go ahead and exit out, and we'll go ahead and issue the new commitment. There we go. Commitment issued successfully. All right, so now we have our commitment number, which is PC 2021 0800169. You can actually view the commitment, and this is exactly what you were looking at before. just without the draft watermark. So now you've finished setting up your file, you've issued your commitment, and you are one step closer to completing your closing. Thank you for joining us today. Have a great day.